tracking as well on a fairly big day. But today, I want to look at something that I think a lot of people are very, very interested in, and a lot of people perhaps aren't as aware as they should be of what they can and can't do in this area, and that is income protection. You can find yourself in a situation where you could lose your job. You could find yourself being suddenly unable to work for physical reasons. There could be a problem, for instance, in your home. All the different things that could mean that suddenly that income, which has been propping up your family, is no longer there. Now, you can insure, but how much does it cost? What are the ins and outs of all of that? Michelle Tate-Lovery is an award-winning financial planner who's going to take us through the ins and outs of all this. She's a member of the Financial Planning Association, and she can tell us more. She's on the line. Michelle, good morning.
Good morning.
It's a huge area, this, isn't it? And I would suspect that many people listening to this right now would have thought about it but haven't actually done anything about it.
Yes, look, as a financial planner, we're about taking people to where they want to be, and insurance risk, having income protection is pivotal in that plan because they're wanting to make sure that their lifestyle can continue, especially if there's an unforeseen event. Yeah.
How many people would come to you and they haven't got this kind of insurance when they should, and you have to kick them along to get them to do it?
Yeah, look, a lot of people, because it's something that people don't like thinking about. People feel they're pretty invincible, and also they're probably not even very much aware that this sort of insurance exists.
Well, let's go through the ins and outs of it. I've tried to detail some of the things that it would cover. Did I do a reasonable job there?
Not bad, not bad. It actually doesn't cover a loss of job if someone's made redundant or retrenched, but it does cover not being able to work if you're unable to work because of sickness or injury. So that part, yes, yep. Absolutely.
So you can't insure against losing your job?
No, unfortunately not. But if you're not able to work because you've had an accident or you've been diagnosed with an illness, or just not able to, if you're having a depressive episode, a lot of cases
yep.
we're seeing through these days is around being people mentally ill, stress in the workplace, bullying, etc. So yes, those events will actually mean that you can put in the claim for your insurance.
Right, before we take that next step and go into some of that, what about a situation where it may be your mother or your father or one of your children or your partner who falls very ill and suddenly you become the carer?
Yeah, look, people just don't plan for that, and it's about financial independence. It's about creating certainty in your life so that you can be independently looked after, or certainly have the means to fund yourself.
But can the carer have this kind of insurance to cover the possibility?
No.
So it should be the person who's affected by it.
That's right.
Right. Okay. All right. That clarifies what we're talking about. So, how does it work?
Okay. So income protection is one of many insurances, but income protection specifically covers you for up to 80% of your income if you're unable to work because of sickness or injury. And so, for example, if you're on a $60,000 salary, it's going to cover you for 80%. That's $48,000 or $4,000 a month. Now,
for how long?
Yeah, well, most people will get some help, some advice around how to design an income protection policy. And one of the things that is really important is to determine how long you want the payment to be made in the event of any long-term sickness or injury. So you can actually have that policy paid up to age 65 in most cases if you choose that benefit period. Yeah. Also, as far as when it clocks in, you have to actually decide or have someone help design a policy for you that's appropriate around how much sick leave you have. So depending on how much sick leave you have, you will then actually have a waiting period. So the combination of a waiting period, how long you wish to wait before you receive money,
right,
and how long you're on a claim for, the benefit period, are two important variables in determining the price of the income protection policy.
How do insurance companies work out the premiums then?
Oh, a whole lot of variables in that, but certainly gender is important. Statistics around age, whether you're a smoker, is pretty significant. Level of cover, so what your actual income is and how much you choose to insure for. Like, not everyone may choose to insure for 80% of their cover. Sometimes there may be risk associated with your occupation that may load your premium. And basically, there are a whole lot of other features and benefits that you can nominate that would also increase or decrease the premium. If you're involved with any sort of hazardous activities like sports, even soccer potentially could be a hazardous sport, that will have some weight on the underwriting of your application.
All right. What about, there's two kinds of policies, isn't it? Indemnity policy and agreed value policy?
That's right. Most often we see that agreed policies go through the system. An agreed policy is considered to be more favourable because it's at the time of underwriting or application when your income is actually determined. So income at the time of underwriting is the agreed part. Indemnity is around income at the time of claim.
Right.
So your income at the time of claim can actually be lower than your income at the time of application.
Okay.
So an agreed policy is something that you want to actually achieve, because once your salary is agreed on and your level of cover as a result, that can never be taken away from you. So insurance is all about creating certainty in your life.
Yep.
And you want to make sure that if the unforeseen event occurs, that you're going to get X amount of dollars to pay your mortgage and continue your lifestyle.
Okay, yeah, and when you're trying to work out how much protection you need, I mean, you talk about 80%, but it may well be that if you're going to be incapacitated in some way, there'll be things that you won't be able to do, that you might want to do, which would be funded by part of your income, so that would come into play, wouldn't it, if you're thinking about what you might need to keep yourself going at a subsistence level if you're not working.
That's right. Well, remember, you don't have 20% of your income, so it's really important that when you look at your financial situation that you can pay your mortgage, you can pay your bills, pay your food, pay your medical. And obviously the reason why the insurance company doesn't go all the way to that 100% target is because they're trying to create an incentive for you to return to work.
Yep. All right. What about competing policies? Because obviously the thing you should do in anything like this is shop around. So can you do that? Can you try and get a best deal by going from place to place?
Look, you can, but it's very hard for the consumer to wade through all the paperwork that they are furnished with. And there's a lot of advertising on telly these days around, we can make it simple for you. But we find that in this day and age, things are actually more complex. And seeking the advice of a financial advisor in a holistic way who actually drills down and makes sure that insurance is part of the fundamental plan is really important, because all it takes is for someone to have a different type of income. For example, if someone's in business and their income is lumpy, or they're not even sure what their regular amount of income is to insure, that can be determined by the help of a financial advisor.
Yeah.
And also there are so many various options that clients can actually choose from, whether they want an advanced policy or a basic policy. The definition of disability also can vary between providers. And obviously you want to make sure, whilst someone's shopping around, you want to make sure that whilst you might get a cheaper premium, you want to ensure that the insurance company is going to be there to pay you out into the future if you're buying a policy for 10, 20, 30 years.
Two final quick ones if I can. Your superannuation fund, it can do some of this, can't it? Within your super fund?
Yeah, it can, sure. But there's a default level of cover with a superannuation fund. But once again, it's because the cost is quite low, the bells and whistles aren't there. Once again, the definition of disability could be lower end compared to a standalone policy outside superannuation. And sometimes you've got to look at the fine print around what level of income they're going to be insuring. They may or may not insure bonuses or allowances, etc.
Okay, just a final one. I've got an email here. Rob's listening to us up at Tea Gardens. He's asking me about, and this is a general question about financial planners declaring if there are incentives or commissions from these deals. Do you do that generally when you and others are organising these deals?
Absolutely. As part of our code of conduct, as part of the regulations, if insurance actually is part of someone's plan and a product is actually mentioned in the plan, yes, absolutely, full disclosure of fees. Now, the way the insurance companies work, it's not an area that is very regulated at the moment, so there is still commission associated with placing an insurance policy, but provided that is disclosed to the client, that is absolutely lawful. And also, you want to make sure that your financial planner who's received income for doing the work and placing this insurance is going to be around for you to help you in the event of a claim. That's what the commission or the fee is actually is.
Yeah, it's ongoing. All right, look, nice to talk to you. Thank you very much for all of that.
Thanks very much.
Michelle Tate-Lovery there on income insurance. A little bit of a simpleton's guide there at 17 minutes to 12. What's happening on the financial front today? Juliet Saleh joins us from ComSec. Juliet, good morning.
Good morning to you, John.